think the key reason gold's rallying now is because it's anticipating the deflation, significant potential deflation if U.S. risk assets, most notably stock market, continues to, can either say go down or mean revert, because it went up so much the last few years. I think that's what's happening now. The gold market's anticipating stock market going down. Okay, that was been the best place to be, along with cryptos for decades now, along with high bond yields. And now gold's starting to understand that, oh, that rally might be over, and you're seeing that in ETF flows. ETFs had outflows for 4 years in a row, and they're really kicking in this year. They're up about 4%, which would be the most since 2020.
And Alex, when I first met Mike years ago, when we were first talking about him coming to Bloomberg, I said, hey, Mike, what's your commodities call? Buy gold, sell everything else.
I mean, he's pretty much always been right on that one.
That's the call I
remember. Did he have hair at that point?
What's that? No.
Oh, okay. So that call maybe eroded the hair. Yeah.
So, hey, Mike, how do you get a sense, or how do gold traders, I'm not sure if people trade gold or they invest in gold, but how do they feel about valuation? Like at some point people say, oh, this stock has just gotten too far ahead of itself. Do we ever say that about a commodity like gold?
Well, Paul, I love how you go there, because we know you're an equity person and valuations in your brain. In commodities, the main lesson you learn in commodities is they go down because they went up. That's why crude oil is at $65 a barrel. It went up too much. The big difference is gold. The big difference is gold. The key thing is oftentimes you try to find a cost of production is like a valuation what usually goes to. What's happening, what's different with gold, it's the only commodity that really goes up over time continuously, partly because the supply can only increase on average 2% forever, and it's harder and harder to produce, and it's monetary value. So that's what's the significance of gold. Gold is up about 65% since February of 2020. That's when the announcement of the unlimited friendship between President Xi and President Putin, and it's continuing now. The key thing is looking forward is we're seeing deflationary forces in China potentially kicking over in this country, and I'm really worried now. I don't want gold to stay above 3,000, but I think it will, particularly because of the reasons I'm worried about is the U.S. stock market having a bit of a normal correction. Now, 10%'s nothing compared to what usually happens when you have a major shift, which we're having a paradigm shift in what's happening in the U.S. Maybe how about 20 or 30% in the stock market? That means gold continues higher. So I'm worried at these levels, but I think it's going to continue to rally for reasons that are going to hurt most investors, unfortunately.
Is it also to do with this idea that maybe the government could mark to market their gold reserves and then confiscate gold in order to use that and sort of ramp up the Fed's balance sheet? Now, many individuals are going to roll their eyes at this and say, oh my God, Alex, seriously. But no, seriously, could this also be driving some of the last minute buyers?
I think that's part of it, Alex. What we're seeing is a major shift of gold coming to the U.S. because of disparities in U.S. COMEX traded gold versus what trades in London. But it's usually indicative of a bull market. That whole scenario, I think, is part of. It seems kind of odd to me. Whatever you have the price on the books or not, it's still, U.S. still has about 8,000 tons of gold. It's on the books at $42 an ounce. Okay, it should be marked to market. Why not market? I'm just not the accountant. So I don't really get why that's going to matter for the price of gold. It's a global commodity. And one thing I've always enjoyed in the space from gold bugs is they say it's manipulated like in the U.S. I'm like, well, it's a global commodity. It's kind of hard to manipulate something you can trade around the world. And people in India and China hoard it for a good reason historically, and particularly Turkey. But I look at that as gold has a good reason to keep going up. And that's particularly because, let's just start one key fact is, at the end of last year, the U.S. stock market cap to GDP was about 2x. Now it's going back downward. It's down about $6 trillion this year. That's 20% of GDP. I mean, that's a 10 of what really matters for deflation. If that continues, that's what pressures bond yields lower, pressures the Fed to ease, pressures inflation, and makes gold go higher. To me, that's the 10 that matters in gold. And then there's all those little nuances in between that you see in a normal bull market.